Good morning or good afternoon, wherever you are at. How's everybody doing this morning? Can y'all hear me? Make sure I'm not muted. Looks like I'm coming through. Really? Surprise, surprise. I forgot my phone again. Get that shut off real quick. Mute it. It's Friday. People shouldn't be bothering me. How's everybody doing? Oh, good. Loud and clear. Thank you, John. Or Andrew. Andrew, sorry. I was stuck on last night. Hello, Brenda. How's it going, Kevin? Doctor. That's a little bit of a stretch, but I'll take the whisperer part, but the doctor part's a little far. But thank you, Kevin. Good morning, Helen. Welcome to Trading Coaches Playbook. Got my new Braveheart poster up there. I don't know if you can see it. I think you can see it in the back. And I'm having my fourth cup of coffee. I saw an article the other day that said that at least 3 cups of coffee a day is good, but if you go over like 5 or 6, it's bad for you. So I now have permission from the internet that I can have at least 3 or 4 or 5 cups of coffee every single day, and it's healthy. It's going to help me live forever. That's what the internet said. Uh, anyway, let's get this out of the way. I am not a registered broker, dealer, investment advisor. I'm not going to give any recommendations or advice. Everything we do here is purely for educational purposes. If we do happen to mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading here. Is it better or worse? Oh yeah, anything on the internet's true, or mainstream media, or everywhere. That's the hard part today is you don't know what's true anymore. How do you figure it out? Where do you go to sources? So there's a good service to set up. Find a way to get trusted sources that actually, well, that's where Snopes came from, but most of them have some kind of political bias. At least a lot of them. I have yet to see one that seems to be truly completely balanced. I mean, there's a couple out there that do a pretty good job, but biases are something that we all succumb to, and it's important. And we're not going to talk about that today in trading, but we have done that here about biases. We have lots of different biases that skew us to thinking and behaving in certain ways that are not necessarily beneficial for us. They are bad for us, but we do it anyway, just because of the subconscious training that we've got. So right now, is something wrong? Mine seems to be working fine, but I'm not triggering any orders. I'm just watching right now. So Will saying that he's on tech support with Toss. So I don't know if something's up with Toss or not, but like I said, mine's running. I got mine running right here, and it's just fine. So, but here's what's coming up at Wealth Builders. We got the Inner Circle, September 30th and October 7th. And then Monster Market Movers is also September 30th, but that's at 8 Eastern time. The Mastermind Group is October 1st, which is, holy cow, that's Tuesday. Can't believe it's October. I know I get out and about and see people putting Halloween stuff up. It's crazy. Like Halloween's already here. 2024 is almost over. But yeah, it's October 1st and October 8th. The Weekly Whispers Q&A with yours truly is October 3rd. Is it? I better make sure I have that on my calendar. I don't remember seeing that. That's next week. And then Cover Call Explorer with Trip is October 9th. Okay, good. I do have it there. That's no fun when I have something, I forget to put it on my calendar, and then I decide to go do something else, and oops. Free online workshops, Power Hour, every Monday with Rob at noon, and then Trading Coaches Playbook. This one is every Friday at noon. Power Option Plays, Monday and Thursday. Cover Call Explorer with Trip on Thursday, and Brandon's E-Mini Think Tank Monday, Wednesday, and Thursday. So, excuse me. Trying to kill that cough again. You can find us on all the social media platforms. Get all kinds of stuff. If we haven't met, there's a few of the tools that I've got, Patterns in a Flash. It's all about technical analysis. It's all about learning to recognize the patterns so you can whisper to them as well. Right, Kevin? Weekly Whispers is basically just my weekly research. I go looking once a week for patterns, and then that's all I watch for the week. I usually get about 20 or 30 candidates. I do it Thursday night, so you get it Friday morning. Well, depending on what time zone you're on, Usually the tech team, Nick usually gets it done about 10 or 11 o'clock my time, Pacific time. That's usually when I get the email. So it's mid-morning, early afternoon, depending on where you're at. But it's a recording. It's usually about an hour, give or take a little bit, depending on how much rambling I do and how many squirrels I find, how many candidates there are, and how many there were the previous week. Because we go back and look at the big picture view. What's the overall economy doing? We look at last week's trades and what triggered, what didn't, what we could have done better. And then we look at next week's candidates. So 35, 40 minutes is a short one. Hour and 20, hour and a half is long. It's usually right around an hour or so. And then once a week, I also do an update on Tuesday. So you get that Wednesday. So you get about an hour and a half to 2 hours every week of looking at different candidates, patterns, trades. And the small accounts, big returns is a pre-recorded class I did a couple years ago. Just working on, if you're working with a small account, it's a class you could take and just show us some different things you can do to increase the chances of growing that small account to a bigger account, which is the ultimate goal, right? And then when you get to a big account, then you want to make it bigger, right? Life's boring without challenges, at least for me. I didn't find any squirrels yet, Brenda. What are you talking about? We get a squirrel gun? I appreciate that, Kevin. Yeah, I don't know where that came from. It was cool. It was humbling and flattering. So to be dubbed the pattern whisperer. So, but that's what I fell in love with. I started in 2000, and back then, you had books or you had live workshops. That's all you had. But I started reading books, and I bought every book I could. And I fell in love with technical analysis and specifically patterns because I saw the consistent, repetitive nature that most of them have. And then as you learn more and more about them and you start to study them and you get a little deeper, then you start to realize and understand that the patterns that you're looking at on the screen are nothing more than a visual representation of how traders are feeling emotionally about a stock. And actually, candlesticks, that ties right into what we're talking about today, which is candlesticks. Candlesticks are phenomenal for giving us a lot of information in a very compact space. It gives us a lot of insight. If you peel the onion back and you dig a little deeper, a lot of insight into what the traders are feeling on a short-term basis, right? On a daily basis, or even on a minute-to-minute basis if you're using intraday charts. So, and one of the things, this is one thing I love about technical analysis, is it doesn't matter what time frame you trade on. It doesn't matter what instrument you're trading. The analysis part of it applies to every single one of those. So you can trade any time frame. If you want to day trade, you want to be in and out the same day, not have the overnight risk, then you might trade off a 1 minute chart or a 5 minute chart or a tick chart even. And the analysis applies pretty much the same. There's some little nuances, but for the most part, it's the same. So once you learn it, you've got it. It's a skill set that you don't have to keep relearning. In a lot of professions, right, technology keeps upgrading. You have to relearn new stuff and how to do this and how to do that. When it comes to technical analysis, what I'm talking about today is the same stuff I learned 25 years ago. And it hasn't changed. Patterns in a Flash I created in 2010, I think we launched. I started working on that in 2007, 2008. And the information's all pre-recorded, but even 10, 15 years ago, I recorded it. It's still the same today. So you don't have to relearn new stuff. Once you learn it, you get it, you understand it. So that's one of the beauties of it. But we're going to talk about candlesticks today. And for some of this, it'll be very elementary. For others, it'll be maybe, I don't know where you're at in your journey, if you're brand new or if you're a veteran. But this is pretty basic. We'll just kind of rip through it real quick, and then we'll go look at charts. That's what I like to do. Obviously, that's my preference, is to spend as much time on charts as possible. But we got to build a little bit of get a little groundwork here. So open and close are the most important parts of the day. That's kind of a base foundational thing that's important with regard to candlesticks, because that lays the groundwork for a lot of the patterns that you're going to see. So we've got to make sure that we understand that, because the open especially is the most emotional part, because that's where you've got, I'm getting a little ahead of myself here, aren't I? The open gives us the first indication of what may happen throughout the day, right? Overnight news, if something happens overnight, then things change, right? And you've all probably seen the futures, and the futures are up and the futures are down. They've been pretty mellow the last couple of days, not any big news. PCE was pretty much in line, so it wasn't a big deal this morning. Didn't really affect futures much at all. But if big news comes out overnight, then things can gap big time, right? And there's the old Japanese proverb says the first hour of the morning is the rudder of the day. We used to call it amateur hour. It's depends on how you trade, right? Depends on what you're doing. It's not a bad thing to trade. Usually I wait for at least 5 to 10 minutes, maybe 15. And depending on the setup and the situation, I might pull the trigger, I might not. I might wait for the full hour to see, what direction it might be going. Sometimes if you wait that long, then you miss it. But at the same time, sometimes you wait that long and you stay out of a trade that would have been bad. So you got to keep it balanced, right? That's the challenging part to trading is it's really easy. I'm a little cranky this morning because I missed a monster trade just like an hour ago. It was almost a textbook setup, and I looked at it and go, it's sold off so much already. Is there really any more downside in it? And then it did a perfect roll reversal and turned and just collapsed in like 30 minutes. And I'm like, ugh. Like there's 1,500, $2,000 in I think it was 30 minutes, 25, 30 minutes, something like that. It's like, it's frustrating to sit and see it just go by. But at the same time, I've been in that situation. I pulled the trigger on it and it goes against me and stops me out. And it costs you, $500,000, whatever the numbers are. So it's easy to get caught up in the memories of what we missed or this or that. And you've got to remember the ones that you didn't miss. Not only didn't miss, but you got to remember the ones that you stayed out of that would have cost you money. Our memories are funny. We remember what we want to remember, not necessarily everything. So that's something I've talked about in the past too, is making sure you're remembering what you remember. There you go, Brenda. You happy? She's in a playful mood this morning. I don't know if you can hear her. I have a cat. I accidentally got a cat a couple years ago. She's right down here under the desk, and she's got this little ribbon she likes to play with. It was part of some toy that she just ripped apart and shredded, and it's just a string. And she brought it this morning. I was getting out of the shower, and I hear her. Rare, rare. She's got it. She's dragging it around. She just brought it in here now. So, like, I'm busy. She always does that. She always wants to play when I'm doing this. But, excuse me. The close can also be a very emotional spot. And the close, in a lot of ways, is where the pros, if you will, this is kind of it's a generic statement that's been around for a long time. They say the pros close the market. I don't know if that's necessarily true, but the big hedge funds, mutual funds, they're usually making decisions based on how things close. So if the market is higher and they're looking to take profits, there you go. She wanted to come say hi. They might put a market on close order. And so in the last 5 or 10 minutes, that's why the last 5 or 10 or 15 minutes sometimes can be extremely volatile. Because a lot of these big hedge funds have a market on close order. So it says, close out my position at the end of the day. So the volume usually spikes. The volatility can get pretty crazy. And when you see a quick sell-off, then that can be why. And that also gives us an indication, or it can give us an indication of what might happen the next day. If you get a big sell-off in the last half hour and it just blitzes to the south, or vice versa, right? If it just takes off to the upside, then that could be an indication of what might be coming tomorrow. And that's one of the beauties of candlesticks is even if you don't have intraday charts, if you don't see the intraday move, you can tell by the candlestick a lot of times just by knowing the basics, how to analyze the single candlestick itself of who's ahead at the end of the day. I use a lot of sports analogies, right? And you can use it as it's the end of the first quarter or whatever it is. It's like who was ahead at the end of this quarter and who's got the momentum going into the next quarter. Or tug of war. I use tug of war quite often because it's a visual that, somebody doesn't want to get pulled into the pit. The bulls don't want to get pulled in the pit. The bears don't want to get pulled in the pit, but they're going back and forth. So however, you got to make it work in your mind to, what's the word I'm looking for? I don't know. But sometimes the pattern names can be a dead giveaway, pun intended. Because a hangman, you say hangman or hanging man, doesn't sound very positive, does it? So take a guess which side that is. That's a bearish candle. But that's the interesting part, is that it's also got some, it could also be considered bullish. So, but I'm going to cover just 3 different patterns here. And the hangman obviously doesn't sound very bullish, right? It appears the end of a bullish move. And context is very important when it comes to patterns. Where it appears in the move is critical. And I'll show you, if I remember, some of you remind me that if we get into charts, I'll show you, especially like a engulfing pattern. There's a bearish engulfing pattern, or a bullish engulfing pattern. Like, well, not really, because if it's been moving down and then it gaps up one day and then sells off, then that's not technically a bearish engulfing pattern. It comes at the end of a move. So where the pattern shows up is important. But on the hangman, you got the body at the upper end of the range, right? Whether it's a black or white candle, doesn't matter. It's unimportant. So you're looking for a small body. The shadow should be at least twice the length of the body. And this is open to interpretation, right? It's not an exact science. It's more of an art form than anything, like most analysis is. So sometimes, people are like, well, that body's too big. Okay. Well, if you got a super long shadow that's 5 times the length of the body and it's a decent sized body, you can still consider it a hangman, right? So you just it's very subjective, if you will. No upper shadow or very short shadow. And again, that's very subjective. All this is. The important things are the open body is slightly more bullish. Where it closes. In other words, if it's a closed body, it didn't break above the high or the open of the day. If it's an open body, slightly, it's still a small body, but that's more bullish, right? Bearish confirmation is more important with a hangman because when we interpret the hangman itself, basically the bears at one point of the day had control. And the bulls came back in at some point and rallied it back up near the close, or maybe even above the open, maybe even above the open. So the end of the day was actually more bullish. Even though it's a bearish reversal pattern, it's got a little bit of a bullish tinge to it. And let's touch on that real quick. And this is all stuff that I cover in Patterns of Flash. The term reversal is a misnomer. It doesn't mean that it's going to turn and just go the opposite direction. It just means change of direction, not reversal. So we call it a reversal pattern, but technically it is just a change of direction. And stocks move up, down, and also sideways. So it's not uncommon to see a hangman and then have the stock move sideways for a day or two or a week or two even. So when you see a candlestick pattern, especially a reversal pattern, which there's only two continuation, well, there's one continuation pattern, the bullish and bearish version, so two, but almost all of them, every other candlestick pattern is a reversal pattern. Just remember that you can't expect it to turn on a dime. They do sometimes, but you can't plan for that, right? The longer the shadow, the better the signal. So here's just a basic drawing of it. So you've got and the gray part indicates the body, the color of the body doesn't matter. So you've got an uptrend, you've got at least an upward move. The body's at the upper end of the range. The shadow's at least twice the length of the body. No shadow or very short shadow. If you have a long shadow up there, you don't have a hangman, you have a spinning top. And again, bearish confirmation is more important. So there's an example of a hangman. And there's what happened. This one, and you can tell, you notice that it didn't necessarily just reverse on a dime. It actually, for 5 days after that, it essentially went sideways. And then it took a move. And then, it was 5 or 10 days. So it took a good 3 weeks or so for this thing to actually drop off. But the first few days after the pattern showed up, it was essentially sideways, just barely drifted lower. So again, just remember that's a critical piece to candlesticks, is that it's a reversal just means change of direction. So here's some different entry points. If you get on the close of this day, that's a crazy entry, because this lower shadow, right? So it opened one of these two spots and the bears had total control. They were winning all the way up till probably the third quarter. And in the fourth quarter, the bulls come raging back and close it up here near the high or at the high. If you get in at the close of the day when the hangman's closing, that is extraordinarily aggressive, because we have no confirmation whatsoever. And considering that it closed on a bullish momentum, then you're taking a lot of risk, which is okay. If you understand the risk you're taking and you're willing to take that risk, there's nothing wrong with that, because it can pay if it pays off. If the pattern plays out and it actually reverses and tanks the next day, which is pretty rare, but it does happen, But if you're willing to take that risk, then you can. It's just pretty. That's why that's crazy, because the aggressive entry point is the next day. So if it gaps down the next day, or maybe it even gaps up or opens about the same and then starts to fall, that's the aggressive place to get in. The more conservative entry is waiting for the close of the next day for a full confirmation day. Now, on the flip side of that coin, that also, I mean, obviously in this situation, looking at it in hindsight, which is always easy to see, you say, well, I would have gotten in right there, and then I would have got, well, what you would have done or what you should have done or what you could have done is a whole different ballgame than what you actually did. If you wait for the conservative entry, then it could bounce and take off to the upside, right? So you do have more risk here. You have a lot of risk here. You have a decent amount of risk here. And you kind of sort of have less risk here, but the confirmation is good to have that the reversal pattern is probably going to take place. So it just depends. Now, here's the interesting part about how I trade is that I might enter at all three of these places. If I'm confident that the thing is probably going to move down the next day for whatever reason, maybe it's because there's an old candlestick theory that if it's up 8 days in a row, the ninth day is almost always down. It's something like 95 or 97% of the time. The ninth day, or no, it's 8 days. The ninth day is down. So let's say you get a big run, and the 8th day you get a candlestick like this, a hammer or a hangman. That is a situation I might look at it and say, you know what, I'm going to pick up just 1 or 2 contracts here. Depending on the size of the stock and the cost of the options and all that, I might just go pick up 1 contract here and put a stop up above. Say, you know what, okay, 1 or 2 contracts is not going to cost me that much. Maybe it's if you got $1 or $2 of risk, if it gaps against you, okay, I'm willing to take $100, $200 of risk to see if this thing will turn around. See if the 9th day is down. The odds are high that it's going down the next day anyway. So I might pull a trigger on just a really small position at the crazy place. And let's say it gaps down the next morning and it looks like it's going to keep running south, then I might add to it. And at the end of the day, if it looks like it's going to continue, then I might add even more to it there. So it's a way to balance out being very aggressive, trading a very aggressive way, but doing it with a lot less risk. Scaling in, whatever you want to call it. You're essentially just taking a little bit of risk at the really aggressive place. And then if it moves in your favor, you can add to it as it goes. Scaling in is a little more challenging mentally than scaling out is. So if you haven't talked, we can talk about scaling another day, but bearish confirmation is more important. So let's move on to the evening star. So a small body or a doji, as you should know, if you don't, then you definitely need patterns in flash. It is a spinning top, or a doji represents indecision. So this is a 3-candle pattern. It's an evening star. The color of the star is not important, right? So it's almost like a star is hanging up there in the sky. That's kind of the concept of it. We're looking for gap on both sides of the star, preferably. The bigger the gap, the stronger it is. If the 3rd day closes significantly into the 1st day's body. And what you ideally want is light volume on the 1st day and heavy volume on the 3rd day. Because the bulls are in control the 1st day. Right, let me get to the pattern itself, actually. So just a drawing of it, right? You got the trend. Again, you got to remember the trend. The move in front of it is important. So you got an upward move, whether it's 2 or 3 days or 2 or 3 months, 2 or 3 years, whatever it is. Excuse me. You got a nice size candle. Bulls are in total control here, right? Nice bullish move. And then you get a spinning top or a doji. The smaller the body, the more indecisive it is. So you get a small little indecision body. The shadows are not important. If you get big long-legged shadows here, big giant shadows on either end of this, it doesn't matter. The body is the most important part the vast majority of the time when we're looking at candles. So you get a small body. The bulls are losing momentum. So now there's a tug of war. The bulls were winning here. They just about had the bears in the pit. And then all of a sudden they lost their momentum. The bulls, or the bears, stood their ground. And then the next day it gaps down, right? So you get a gap. The bears take control. and the bears start just yanking the bulls, and they get the bulls, depending on how far it goes, they get the bulls into the pit. So the bears have taken over. So you have a complete reversal of momentum. That's what the evening star represents, essentially. Now, this is stronger. The more candles you have in a pattern, the stronger it becomes, right? A hangman is just one candle pattern, just one day. Here we've got 3 days. So most patterns are 2 or 3 days. Hangman, or the hammer, which is the inverse of the hangman. Evening star, and this is the beauty of patterns, is you got evening star. Guess what a morning star looks like? Turn your head upside down and look at this. That's what you'll see, a morning star. It's the same thing. That's the beauty. When you really get down to patterns, there's about 7 or 8 of them. So, because all you have to do is learn one and then flip it over and you have the other one. There's about 30 or 35 patterns inside patterns of Flash, but when you break it down, you got a symmetrical triangle, ascending, descending triangle. They're essentially the same thing. And then a flag and a pennant are very similar. It's just a few little changes to them, and you go, okay, this is a flag and a pennant. It's very similar. So there's lots of similarities between the patterns. So it's not as, some people get, they freak out. 35 patterns, holy cow. It's not that complex. It's really not. But there's the evening star. You can see 3 days. And again, you'll notice too, if we go back one actually, that the volume was heavy on day one, right? You got a huge run up, lots of volume. On the first day of the pattern, the volume was heavy. On the third day of the pattern, it was not. It was just average. That's the opposite of what we want, which should raise a red flag and say, okay, maybe this pattern isn't that strong, which would lead me to believe, be more cautious. So if I found this pattern and I noticed that volume, okay, I'm going to take half the size of position, or maybe a quarter, maybe 3/4. I'm going to take a smaller position if I'm going to trade this, because that's a lot of bullish momentum, and the bears really didn't come in that strong. So you can see what happened after that. It just went sideways. Again, a reversal is a misnomer. This is 2.5, 3 weeks of time. So if you'd have just bought puts on that, the close of the day, the pattern formed, you'd be break even. You'd probably be upside down a little bit, depending on how much time you bought. If you bought 6 months of time, you might be break even. But if you only bought a month or two's worth of time, which is typically what I'll do on a candlestick pattern, because it's a 1 to 7 day trade is all. So you would have taken a hit on this thing. It would have been a loser. Not much, at least, but oh yeah, there's the volume. I got ahead of myself there, pointed out. So here's the interesting part. Notice there's an evening doji star right back here, right in the middle there. Is that the one we just looked at? I'm trying to think if that scrunched it down and it. No, I don't think it is. But you can see there's an evening doji star there, and again, it went just sideways. And that one, again, the volume is not necessarily, just looking down below, the volume is not that spectacular there. So that's a pattern that, yeah, the pattern's there, but is it, when you do some volume analysis, you go, oh, it's maybe not as strong as I'd like it to be. Here we've got an evening star showed up. And if you look at the star pattern, the star itself, the middle candle, that's actually very bearish, right? Because the bulls ran it up to that high. It looks like they tagged the previous high, and then it sold off and it closed right near the low. There's barely any shadow on that. So you got a gap after the first day of the pattern, and then a bearish candle, which is a star, and then it gaps down the next day and starts to drop. And you'll notice the volume on the first day of the pattern is really light. The volume on the third day of the pattern is very heavy. There's my arrows. Now, this one, in this case, did, well, I don't know if I'd say it even reversed, but it was already stalling out. So you got a evening doji star here, which basically stopped this uptrend that we had, the move that we had. So it turned from upwards to sideways. And then we get another evening star at the same resistance level with strong volume on the last day, which is a good indication. It says, hey, we got light volume here. So the bulls are trying to rally. They're trying to break it back above this high. And they did the next day, or got really close to it at least. They got to the same high or close to it and then sold off. So this candle itself, just looking at that without seeing the rest of it, gives a little bit of bearishness. And when it gaps down the next day and sells off with heavy volume, that's a good indication that the bears have taken control. So you see the little nuances you can take in each of the patterns when you analyze them, and especially when you attach the volume to it and say, okay, who is winning this tug of war? Who's winning the game, whatever you want to call it. And when you get a weak pattern like this that doesn't really indicate who's winning, and then you got a strong pattern like this, that allows you to say, okay, now I'm going to take more risk on this one. This is one analyzing it like this, going, there's more volume on this day. It's selling off heavy. That looks good. It looks like the bears are in total control right now. They have defeated the bulls. And so you got 2 or 3 days down. Eight candles from the far right. We don't like the far right, Brenda. We don't like the far left either. I'm not sure where you're counting from, but oh, 1, 2, 3, 4, 5. Oh, Morning Star. My mind's in the Evening Star. Yeah. Yeah, it's not, well, it's kind of pretty, it's interesting. It's almost a double Morning Star. It's 2 stars. Good eye, actually. I didn't even see that. So, okay, so Brenda's talking about this right here, which you've got the down day and a big gap down and a little gap up, a little doji, and then this day is upward. So that's, you kind of have 2 stars there. This is where it's, yeah, exactly. This is where the analysis part comes in. And it's one of the reasons it's important to learn those little nuances. What makes it stronger, what makes it weaker. So this is it's a little wonky. It's not a traditional it's not a technically an exact Morning Star, but I kind of gave up on that being the OCD thing like I used to be. But there's a ton of stuff going on here. We're just looking at this one chart here. And this is where candlesticks are beautiful, is that there's lots of different things. And I'm just looking back historically here. So there's a piercing pattern right here, which precedes that big move to the upside. This could have been earnings or something like that. We don't know what caused this gap. I don't even know when the time frame of this was. It doesn't really matter. And then you've got a rising through methods right here. It's not perfect textbook, but it's pretty darn close. Then you have the evening doji star right here. You got a bearish engulfing pattern right here. Now, here is, I want to go back here real quick as an example. This one right here, try to put a square on it instead of a circle so it's different. Some people would say, well, that's a dark cloud cover. Or they might look at this and say, there's a bearish engulfing pattern. Because this candle right here is engulfing the previous day. This is where context matters. The trend that we're in is already down. So this is not technically a bearish engulfing pattern. This one up here is, because we had an upward move before the pattern showed up. Now, does this mean anything? Not really. Does it show that the bears have some strength? Yeah. Does it indicate that the trend might continue? It could. In this case, it did. But when you see something like that, a pattern that's not in the context of the trend, then I don't put a whole lot of weight on it. You could say, actually, there's a morning star right here. It's not that great. The third candle should be a lot bigger. That little body isn't really huge, but you got a shooting star candle pattern right here. Kind of upside down of a hammer, right? So just the beauty is you just get the basic concepts and the foundational stuff down, and then you can look at them and just see individually who won, the bulls or bears. Who's got the strength? And that one candle right there, you can tell the bears closed it out, right? It gapped down in the morning, then the bulls run it back up. They made a new high compared to the day before, but by the end of the day, the bears had closed it all the way on the low. Can't even see a shadow there. So that's a bearish candle. And then you've got, of course, the evening star there. And then right here, you've got a falling 3 methods, which is the opposite of this rising 3, right? You can see those are the continuation patterns. That's interesting. I don't think I ever saw that. There's a rising 3 and a falling 3 in the same chart. And they're both continuation patterns. And they both played out how you would expect them to. This here continued for a few days. And this one, well, it took a few days, but it did continue over a longer time. It gapped down and then it rallied back up. But you can see how much there is right here on just this one little example chart. But one of the things that makes this pattern itself so much stronger is having these multiple patterns right here that are all basically building the top. So they're all finding this spot. It keeps on coming up. The stock keeps bumping its head right there. Evening star, bearish engulfing pattern. Not really a morning star because it didn't drop before it. I mean, a day or two down, that's not enough. So that's not technically a morning star. You got a shooting star type of pattern right here. And then you get the evening star with the big volume on the big down day. That all right there says that this pattern itself is probably going to be pretty solid. And sure enough, it was. And we never know, right? But when you combine all that analysis and you look at every little piece of that puzzle, and it's another way I see it, is you get a 1,000-piece puzzle and you're putting it together. That's all this is. So if you like puzzles, there's an analogy. Okay, what are the pieces of the puzzle? Can I make the picture out? What does the picture look like? Does it look like a bull or does it look like a bear? So. All right. Let's move on. We're going to go to the bullish engulfing. That was fun, though. That was a lot. There's a lot of stuff on there that I hadn't seen before. Of course, I haven't looked at that chart for a while, but. So the bullish engulfing pattern, clearly defined trend. Again, the context of where the pattern shows up is important. It's a 2-candle pattern. The second candle engulfs the previous day. And the second day is the opposite of the first day. And the color of the first day doesn't necessarily matter. It's not critical. It's stronger if the first day of the small body is followed by a large second day. So the smaller the day before and the bigger the second day, the stronger it is. If there's heavy volume, which is what we sort of see, doesn't have to, but it's definitely preferable, especially on a bullish one. Bearish is less important, but if the second day, if the engulfing pattern engulfs multiple days, then it makes it stronger. Right? So there's some things we can look at and say, okay, this pattern is stronger than normal because of X, Y, and Z. So you can see there's kind of the context of the pattern. I just realized, holy cow, it's already 9:40. I want to get to some actual charts that are happening right now. So buying pressures overwhelm selling pressure. So the bears were in control the first day, and then the bulls, and they woke up to winning. Right, the next morning they gapped it down. So the bears were winning the first day. They gap it down. Whoops, they gap it down the next morning. So they're still in total control the next morning at the open. But then by the end of regulation, by the end of the game, actually, the bulls have won big time. Completely overwhelmed the bears. So here's another one, just a reminder. It's reversal is a misnomer. So does this thing mean it's going to turn and go the opposite direction? Not necessarily. It could just go sideways. We don't know. But there's a pretty solid move, bearish move in front of this. And then you've got solid volume on the candle the last day there. You've got a shaved head, so there's no shadow on the top, which means the bulls closed it on the high, which is an indication of strength. And you've got heavy volume. And it engulfed 3 days. So you've got several different pieces to this puzzle that paint a pretty bullish picture. All right, let me back up real quick. Oops. Oh, the criteria. Grab your phone. Take a picture of it real quick. Or just go get patterns in a flash because this is all in there. And this will be up on this will be posted up on YouTube. Usually I think it's about a week or so. I don't know how long it takes them to. I think they clean me up and try to make me look better. I don't know. So, I don't know how long it takes to get it up on YouTube, but I get notified. It seems like it's the next week that it pops up. Did you get that, Sandy? Hopefully. So let's see what happened with this thing. Well, pointing out the volume. So this one turned immediately, which isn't a huge surprise considering that you've got a pretty heavy sell-off. So it's most likely oversold. And then you've got an engulfing pattern that is strong. Lots of volume. It engulfs 3 previous days and it closed on the high. So when you analyze it, look at it that way, you should be able to say, okay, the next day probably going to be north. So let's prepare for that. Let's plan for a big up day the next day. And sure enough, that's what we got. Now you can easily say, well, here's a candle back here. Look at that one right there. You got a shaved head there, and it gapped down and sold off. That, I don't know if you could probably say technically that's a bullish engulfing, but it's not really. Didn't really, I mean, I don't know if it engulfed the previous day or not, but there's a morning star that didn't play out. There's a mat hold right here, which is a continuation pattern, which led us to believe that it would probably continue. There's a big Maribozu right there. I get too much on it. Right, there's a Maribozu, so shaved head and shaved bottom, no shadows whatsoever. There's a Harami pattern right here. So there's tons of patterns in here that you could see, and a lot of them don't necessarily play out. But when you get all the pieces of the puzzle together and you get a good, solid, strong one, that's when you pay attention. So could it be a W, a double bottom? Yeah, it could. Right cheek up. And then the midpoint is right there. So yeah, it's break. Actually, this is actually the setup that I missed this morning, except the opposite. It was bearish. Which yeah, it's actually, let me clear all that off. Good eye. I didn't see that, but and that's the funny thing. Sometimes you see it, sometimes you don't. But yeah, it's with the right cheek up. But so a double bottom, this is in patterns in a flash too. But the midpoint, the breakout of the midpoint, which is right there, is what we're looking for. And it broke out of the midpoint, and then it has pulled back and given us a roll reversal. Which again, that's what I was cranky about this morning, because it was the opposite. It broke down. It was gold, right? Gold broke down, rallied back up, tapped the old support as resistance, and turned over, and it just collapsed in like 30 minutes. And it moved so fast, though, I didn't catch it. I'm like, I was looking at it, and I was like, I'm going to wait. I'm going to be patient because it's already dropped a bunch. I think it might be oversold. So I decided to be patient, and then I got cranky. What I should have done is picked up just a couple. And I did that earlier this morning. I picked up just a couple. I wasn't that sure if it was going to move or not. So I picked up just a couple contracts. And this one I was like, I think it could move. I'm going to go a little bit bigger. And I decided to wait. And by the time it was over, it was too late. So, but it happens often. It's part of trading. You know, you're not gonna hit a home run every at bat. You're not gonna get a hit at every bat. You're gonna strike out. You're gonna watch pitches go by and be like, oh, I should have swung at that. I should have swung this morning. I did swing a couple times. I'm up a little bit for the day. I would have had a very solid day. So, and it's not even about the money for me. It's about the fact that I didn't do what I should have done. I should have swung at the pitch. So anyway. Again, entry points, potential entry points where you might want to get in. And again, if you find a pattern in the example that is really strong, there's lots of pieces of the puzzle that say the bulls are in control, then I might, nibble on it right here. You don't go to a strange body of water and just dive in head first, do you? You stick your toe in, you check the temperature of the water, you make sure it's deep enough. And then you dive in, right? So I like to stick my toe in the water, pick up 1 or 2 contracts here, see what happens the next day. And honestly, that's what I was thinking this morning on this goal. I was like, I'm going to pick up a couple here because I think it's probably going to go. And then if it breaks that spot, it was a really aggressive place. I just didn't, for whatever reason, I didn't pull the trigger. So it is what it is. And you know what? I'm still alive, still profitable for the day, so I don't care. Well, I can't say that. I do care, obviously. I'm cranky about it. But that's a normal day of trading, right? It's just you have to get used to that. You're gonna strike out, you're gonna watch pitches go by, you're gonna miss opportunities. The beauty is the market's still there. It's still open, it's still moving, it's still gonna do things, and I'll wait for the next opportunity. And hopefully I'll catch the next opportunity. But a lot of times when you step into the batter's box, you wait for the pitch and you don't swing and you miss a home run pitch. A lot of times you swing and you just get a single, or maybe you get a double. Maybe no pitch comes, so you walk. And then occasionally you get that perfect pitch and you do swing and you swing perfectly and you hit it perfectly and boom, you get a home run. Lots of analogies, but I want to go see. I don't think either one of those hit. So the trade watch alerts is what Amelia essentially retired. So she handed that over to me. So every morning I send out 3 different candidates for potential trades. And I use Candlesticks to find them. I've got, where'd they go? So I've got a bearish engulfing. This is a filter that I use. So I just go through these looking for, see, there's a beautiful bearish engulfing pattern. That's not today yet. Okay, so today didn't do much. But you can see that this thing looks like it could be overbought, but it doesn't necessarily mean just having a bearish engulfing pattern like that doesn't mean it's going to just turn a tank. And you'll notice the volume at the bottom is not very heavy. If the volume was super heavy, I probably would have taken a closer look at this. Yeah, struck out looking. I just saw you're coming, Brenda. Exactly. I wasn't a very good hitter when I played baseball. So Bank of New York, there's a bearish engulfing pattern there. You see the run up. And today it's up, of course, but Maple Bear, there's almost an evening star right there. There's no gaps between the candles, and that candle's the body's a little too big. It's not textbook, but again, there's a bearish engulfing pattern yesterday, and then this is this morning. It's just updating. So that's one I'm a little cranky. Missed the symmetrical triangle on that one, but it ran so fast. It was like, You're like, how many of these you miss? I still catch some. So up 115% this year so far. DraftKings, bearish engulfing pattern yesterday. That last candle is today. Not a lot of volume, though. So this is the list I go through and look. There's one that's, Ormet. Again, you can see that bearish engulfing pattern there. There's ICE. Let me get that bigger. I didn't consider, I mean, even though, see, and this is the thing, the filter will show you candles that open this. So yesterday, the black candle, not today's candle, which is the last one there. Yesterday's candle, it gapped up from the previous day and then sold off. So the filter itself will show this, but it's not technically a bearish engulfing. This one here is. That's a bearish engulfing pattern. And it's actually a fairly nice one because it engulfs 3 previous days. Had solid volume. I was a little bit bigger than average, but not huge. But you can see where, again, that term misnomer comes in because we had a big rally and it just started going sideways from there. It didn't just reverse on a dime. But now we're starting to get some bearishness to it where we've hit that. We've got a double top essentially. In fact, this would be, go to line chart, you can see it's not textbook, especially when you go to line chart, it's not beautiful. But when you look at candles, you essentially have that peak. So you could still consider it a double top. It's all hitting that spot. The midpoint's right there. So once it breaks the midpoint, it's broken the midpoint back here on this big candle. And it's just gone sideways ever since. And we've got kind of a quasi falling through methods here. Actually, oh, that's right. This is ICE. This is one that I had on the list for today. Looking for it to drop if it broke that 157.44. That was the text I put out this morning to everybody that's in Trade Watch Alerts that if ICE breaks 157.44, I'd be bearish on it because I would expect this momentum to continue. And I put an order in for it, a contingent order that was going to buy puts if it crossed 157.44. But then I had to cancel part on it because I just learned this recently about TOS, is that you can put a time frame to cancel it. I put a 30-minute cancel on. So if it didn't hit it in 30 minutes, just cancel the order. I don't want to sit on and watch all day because you can see what it's doing right now. It's just sitting here doing nothing, just a spinning top. And later in the day, it's probably not going to drop and just take off to the downside. It could, but I'm not going to sit there and babysit it all day long and wait. So this one's already been canceled. And then the other one, we'll show you the other word is TWA, Trade Watch Alerts. So yeah, that was ICE. And then we had AMAT. This is another one that was stuck in a channel. We got a hangman pattern that showed up right at a resistance level. And that, well, if it breaks north, it probably would have continued. But, okay, I'll finish with that, Brenda. I'm going to look at these last two, and then we'll look at spiders, and then we're going to wrap up there because it's almost time. I can't go late today. So I was looking for this possibly to break out to the north side. And like I thought the momentum would maybe continue if it did. But obviously it didn't. So there was no trade on this. And some days, I put out 3 and not a single one of them hits. Other days, all 3 of them hit. Some days, one of them hits. And obviously it's open to interpretation. So you got to, I put out what I see, my analysis, just so, a few little lines. It's got to be like text. So it's got to be less than 150 characters. So Let me see if I have it there. Today's the 27th. Yeah, I do. So I just keep a little word. This is my little word thing that I use. So for my trade watch alerts, there's today. I send out the futures, what the futures are at usually right around 6 a.m., 8 a.m., 9 a.m. So about a half hour before the open. Put out the economic data. If I can pluck the economic data, if it's not been put out, or if it's been put out already and I can get it, if I can find it. Sometimes it's hard to find. I'll put it on there, what it was. PCE came out today and was pretty much in line with the expectations. And then here's the alerts for today. You see AMAT, Flex, and ICE. So Flex, that's the chart on the right-hand side there. Huge momentum yesterday, pushing bullish, is looking for follow-through. Bullish above yesterday's high of 34.42. But you can see, we go over here. So this is another one I was looking for the potential, this bullish move. We've had lots of bullish momentum here, looking for this bullish momentum to continue. And these are day trades, right? That's what we're talking about candles here today for, is day trades. Just looking for something to get in and out the same day. And if it triggers, I'm usually looking for, depending on the volatility of the stock, looking for 10 to 20, maybe 30% if it's a really volatile stock. So something like this, $33 stock, even though it has some volatility, I'd probably shoot for about 10%. So whatever I get filled at, if I do a contingent order, if I get filled, I'll go add 10%. Sometimes I'll go 15 and adjust it and keep an eye on it, watch it, adjust it, maybe put a stop on it and trail the stop up. It just depends on exactly what's going on in the market that day. So in this case, none of these have hit. So ICE is my favorite on the list, but sometimes they get really good looking candidates, and other days it's like, I'm not a huge fan of these, but you step up to the plate and you wait for the pitch. And if the right pitch comes, and you swing. Today, we didn't have any pitch that we liked. Yesterday, there was one. I think there was one day this week where all three of them hit. Two turned out profitable, and one ended up stopping out with a loss. It was actually a bigger loss than I was planning for. So, but it happens. It's the nature of the beast. Sometimes you strike out. Struck out that day. What settings for volume? I guess it depends on what you mean with settings. Give me a little more specifics there, Sandy. Because the moving average, the blue, you can see the blue there, moving average 22 days. It's just the green indicates that it was an update. It closed up for the day. Red indicates it closed down for the day. But as far as settings, I don't know. The volume, I don't know. I guess I'm a little lost on I'm not sure what settings mean, because there's not a whole lot of settings for volume. The volume is the volume. That's why I'm a little confused. You help me out, understand exactly what you mean, if you mean something other than that. Because I don't know what, there's not a whole lot to set on volume, but unless that's the thing, I don't know. Oh, hourly or daily? This is the daily chart. We could look at, this Omega charts, right? And if you haven't heard yet, there is a training we put out a couple months ago. I did it on Omega charts, on how to use it, how to set it up, and how to use it. And yes, Brenda, I found plenty of squirrels in there. So I find, if I see something that I think is important to teach, then I'm going to teach it. That's why I usually go long, and I can't today, but, I don't have volume on any of these. Probably that's not a good example. But these are my market charts. This is what I have up here in the corner, so I can see on the left-hand side, I have 5 minutes. On the right side, I have daily. So it's just, as far as volume goes, you can use, the volume is going to be the same for no matter what time frame you're on. The only thing you have to keep in mind is that what time frame you're on, right? If you're looking at a 5-minute chart, then that volume is only for those 5 minutes. I'm not sure. What we're looking at here is a daily chart. So this is end-of-day volume. So the volume bars that are down at the bottom tells how much volume there was for that particular day. But if you're looking at a 5-minute chart, then obviously it applies just to that 5 minutes. So that goes back to what I said in the beginning, is that you can use this once you learn the analysis and how to analyze the candlesticks, the volume indicators. If you're using other indicators, then you can apply it to any time frame: 1 minute, 5 minutes, 60 minutes, 4 hours. It's all the same analysis process. The only thing you have to change is the time frame you're looking at. If you're looking at a 5-minute chart, you might be in a trade. 12 candles is an hour. Whereas if you're looking at a daily, then 12 candles is 12 days. So then you can use this for any instrument. It doesn't matter what you're trading, whether it's stocks, commodities, futures, currencies, crypto. It's all technical analysis. So it's all the same. Charting is charting is charting. Not a whole lot to look at here, really, right? We're broken out to new highs. As far as analyzing the candles, there's an evening doji star, kind of. You have a spinning top here. If this was a big bearish day, well, technically it's not, because the first day should be up, and you got this big kind of shooting star here. But there's not, a couple little hangmen here, which tells you that they're not necessarily the greatest of reversal patterns. So I'm expecting this thing to pull back and use this 565 as a support. That's what I would expect from here, but it could just go sideways for a little bit, then do that. It could go sideways and take off. Obviously, it can do anything. None of us have a crystal ball. So that's the challenging part to trading. But when you learn to analyze, as I've been showing you today, and put the odds on your side, try to figure out, put the pieces of the puzzle together. What does the picture look like? Who's winning the game, the bulls or the bears? And you start to put that puzzle together with all the pieces of analysis. And you go, okay, it looks like the bears are going to win this game. I'm going to wager on the bears. Or it looks like the bulls are going to win this game. I'm going to wager on the bulls. If you bet on sports, which I don't, but I don't watch sports much anymore. I'd like to, but I just don't have time. And same thing, right? If you're in the third quarter and somebody's ahead, you know probably who's going to win. I don't know if you can bet at that point. I think you still can. But you can place a bet. Same thing here. You just try to figure out the piece of the puzzle and figure out who's going to win the game and then go. But yeah, I would expect this rally that we've had over the last couple of weeks, 2-3 weeks, is pretty steep and pretty quick. I would expect some kind of pullback or at least a resting period. Just like here, right? We got a big rally, big, huge rally there. And it slowed down and dropped off for a little bit, had a nice, healthy pullback before it resumed the uptrend. So I would expect the same kind of thing here. So, all right. Any other real quick questions? Because like I said, I cannot go over today. So, yeah, if you want to, if you want to learn the candlestick stuff, the patterns, go get patterns in Flash. If you want 20 or 30 candidates every single week, where I go through this every week and show my analysis, weekly wishes would be for you. Trade watch alerts if you want to see potential trades every single morning. Just get kind of a general analysis of what the futures are doing, what the economic data is coming out, and then potential trades. And I'd send out reviews too of what happened the day before. So the trade watch alerts might be for you. If you want to learn Omega charts, if you don't have Omega charts, you can get it. Or if you want to learn it, there's a training program in there that I created. There's about 6 or 7 hours about how to set it up and how to utilize it and how to use the practice platform, and basically soup to nuts. You'll learn everything there is to learn about Omega charts. Almost everything. I don't even use everything. I use probably 10% of it, maybe 20%. So, all righty. Well, thanks for coming out and having some fun. And look forward to seeing you in the next one, whenever that is. Weekly Whispers, I think it's next week. So if you're in that, then we'll see you then. Y'all have a great weekend, and we'll see you next time. God bless. Bye-bye.